One of the main reasons why the price of AMC is still trading at the lowest and cheapest discounted prices it is trading right now is because of the dog pools abuse, major abuse. And I wanted to share with you something really interesting that I found here on Reddit. And it's a pretty interesting short discussion coming from the New York Stock Exchange president itself. It's not new information, it's something we already knew, but now linked to what the SEC has been doing or is in the middle of doing. I think it's worth checking out if you still want AMC to do what it needs to do. So I'm going to play this short video and we're going to listen. Oops, sorry. Let's go. No sound. Sorry.
Percentage of the retail investor. Can you address that? I think one thing to recognize, even those stats that you're showing, in single stocks, those stats are even more significant. So in some of the meme stocks that we've seen, or where there are stocks that have high level of retail participation, the vast majority of order flow can trade off of exchanges, which is problematic for a number of reasons. Not just because of information disparities, but also because that price formation is not really reflective of what supply and demand is. And that's what our markets are intended to do, is really find price by contributing all of the interest across all investors. And when you're not including sometimes 65% or 70% of investors, you're not really getting to what that price is. And so we do think that the pendulum has swung too far, and that some of the policy decisions that the SEC made to promote competition at an order level have actually led to a lot of fragmentation and off-exchange trading. And we would be encouraged to see more transparency into that price formation. So I do think that while retail investors have a good experience in many ways, that ultimate price, the best price in the market, should be set in a more transparent way.
If you place a market order, a retail market order, 90, 95% do not go to the lit exchanges, do not go to NASDAQ or New York Stock Exchange. They go to wholesalers, and they don't have order by order competition. And part of that is because of what you just said, payment for order flow, which is, yes, it's banned in the UK and in Canada and Australia. The European Union, through something called ESMA, is looking at that right now. And so I think it's natural that we look to say, how do we drive greater competition and efficiency in this market and use the tools that...
All right, folks. Yeah, so again, as I mentioned earlier, this is not new information, but it's really interesting for the New York Stock Exchange president, the lady that was speaking on the video, to tie this to what the SEC efforts are really looking into. Because if AMC is not trading at $185 a share now, it's really because of the dog pool abuse. I mean, if 65% of the trades in retail orders, including AMC, all right, across the board, are being done underneath the table, which is another way of calling the raw pool, yeah, that's definitely problematic. Because as I'm telling you many times now, what we're seeing with AMC is just the tip of an iceberg, which is about to potentially create a lot of chaos. Chaos in the sense that retail participating in the market in the America is not only through single stocks, it's also through 401ks, pension funds, and a lot more other assets. So if you want to keep markets afloat with liquidity for the hedge funds, for the pension funds, for the investment firms, for the traders, for the market makers, to continue to have something to trade, some money to move around, yeah, they need retail investor. And that's why I think it's really important to keep an eye on what the SEC is doing in terms of preventing draw pool from actually continuing to do the abuse by which AMC will be flying right now. And also if they need to keep the integrity and transparency back into the markets. Otherwise, as I mentioned earlier, this could create a major pullback from retail, because at some point they will be frustrated and get out. Now, I think it will take a lot of stress for that to happen, but there is still a lot of things that the SEC and other regulators across the globe, not only in the US, are looking into doing when it comes to banning payment for order flow, which contributes a lot into the volume going to draw pool. So let's just continue to wait and see how things unfold, because this is not going to be a one night thing. It's going to be something that will take a lot of time to be implemented and changed, because we are fighting a system that is by nature inclined to be very corrupted, and there is a lot of money involved. So it's not going to be easy to change, but at least they are moving towards the right direction, which means big steps for people holding AMC stock. So I wouldn't hold my breath on it, but something to kind of wait on and pay close attention.